Hello and welcome to Fintech Insider Insights. I'm David Barton-Grimley, Fintech Strategy Director right here at 11FS. In this episode, we'll be discussing how fintech experiences can be made to feel invisible. So what does that mean? Well, with the rise of APIs and embedded financial services, we're going to take a look at the next generation of services and fintechs that are innovating deeper into the stack and acting a little bit more like a connective tissue that connects across ecosystems and financial platforms that connects digital to our financial lives. So this week, we're going to be doing things a little bit differently, drawing from both our own 11FS research as well as insights and case studies from an expert in this field, who I'll introduce you to very shortly. So PSA before we start, this might get a little technical at times, but these are the technologies that could ultimately transform the way we interact with fintech. So without further ado, first up, I'm joined by my 11FS colleague and co-host, Ross Gallagher, Ventures Director at 11FS. Always great to do a pod together, Ross. We don't get to do it often enough. And we are both in Yorkshire, which is kind of incredible. Can you tell our listeners a little bit about what you've been up to recently?
Yeah, absolutely. DBG, always great to get to hang out together and chat about this stuff, which we both love. Look, in terms of what I have been working on recently, we are really lucky at 11FS. We get to work with some awesome clients. I think some of the more ambitious clients, the ones that are really thinking about, hey, what's the future of financial services and how do we help deliver that? So no 2 days are ever the same. No day is ever boring. Yeah, it's great.
Awesome. And next up, it's a warm welcome back to the podcast to Rory O'Reilly, co-founder and CEO of KnotAPI. So Rory, it's great to have you back on the podcast. Can you tell us a little bit more about what you do at KnotAPI?
Absolutely great to be here, David and Ross. Thanks so much for having me back. It was a blast last time and happy to have a great conversation today. At KnotAPI, we're building APIs that don't exist, or maybe I should say they do not exist. Our first product we call Card Switcher, and it's essentially Plaid for merchant connectivity. We sell Card Switcher to the banks, and we make it easy to add your card when you switch banks. You don't have to enter your card number, expiration, CVV. You just log into the merchant and boom, your card is instantly there as the default preferred card at that merchant.
Amazing. Simple. That's the way it should work, right?
Exactly.
Right. Let's dive in. So to kick off the show, we're going to take a look at the experiences that are made possible when financial capabilities like KnotAPI, for example, are built out across digital ecosystems and connect these, shall we say, players that don't necessarily talk so well to each other, and how some of this connective tissue can actually fix and help customer pain points. So we'll explore how these business models can meet the customer where they are and how fintech services can be made to vanish or disappear into the background, working as a service for us. So Ross, I'm going to come to you first. As an observer and commentator in this industry for many, many years, what do you think is happening here to the fintech industry, and what do you think it means to pursue innovation kind of further down in this tech stack, like providers like KnotAPI are doing?
Well, it's so two excellent questions. I think we're at an interesting point in financial services. I think specifically from a market disruption perspective, and I think there's almost, I would say, which we haven't seen in a little while, the temptation for established players to get complacent a little bit, right? It feels like we've had a decade plus of some really, really intense disruption from a digital financial services, from a fintech perspective. And that put everybody on notice. Everybody was on their toes, right? And so a decade on, I could see how people in those established banks, financial institutions could look at the landscape and say, hey, it feels like this is settled. It feels like, the people that we were really scared about 5, 6, 8 years ago, we kind of recognize them now. We know what they are and we know how to compete with them. And that's where the complacency starts to set in. And I think actually getting complacent now would be a real mistake, right? If I go on to your question about what it means to innovate further down the stack, in the simplest possible terms, when you open an app or a browser, that can be Deliveroo, it can be Uber, it can be your financial services, your banking app. There's what you see, which is essentially the user experience layer. And then there's everything that kind of sits beneath that, right? Powers it. So there's your sort of front end. That's essentially the top of your stack. That's where you have lots of business logic and rules and all of that sort of stuff. You've got the bottom of your stack, and that's all of your sort of what we would call like core capabilities, right? So things like identity. How does a bank or any other provider verify that you are you? Or card processing or payments or whatever that is. And then there's generally this big tangled mess that sits in the middle. Now, making changes or updates to the technology stack generally gets more complex as you move down the stack towards those core capabilities. But it's also more impactful. And it means that you can, by sort of breaking down those core capabilities, by building them back up and combining them in new and innovative ways, that's how you build these experiences, these services that Rory mentioned do not exist. And I absolutely love that pun. So if you look at the landscape now, okay, everybody looks like a bank at quote unquote the user experience layer, but actually that's not the case. And how those stacks have been built and architected can become a real point of differentiation as we move into the next phase of sort of competition and disruption.
Yeah, it's such an important point. And fixing those capabilities, I guess, further and further down the stack, the deeper into the stack you get, the harder it is to actually make any change. And Rory, I'd love to get your view in the industry overall around like what would you say are some of the really big gnarly problems that fintech is now, pivoting in a way to start solving in the stack?
I think that the one major limitation in fintech is it's still fragmented. Let's take Built, for example, one of our customers, an amazing customer who built some great financial technology for folks who are renting. That way you can get rewards on your rental card. You still have to go and enter your card details manually somewhere. So the user has a somewhat disjointed experience where they have this cognitive load of having to switch between apps, or they really have to get into the flow of, I genuinely want to use my card. Now I have to grab my laptop and magically know that I want to update it. So Knot's trying to really bring and bridge those gaps together. I think the best fintechs bridge the gap. Maybe I'll take Astra, for example, which uses Visa Direct and MasterCard Send to kind of facilitate payments. All you do is say, I want to load money to my card. You enter your card details. Boom, the money's in your account. So the major pain point is disintermediated and fragment systems that don't really communicate, whether it's technology not communicating or users having to do something. And then the best solutions are folks like Built, who adapt new technologies, who say, I want the user to stay in my domain, not have to context switch, not have to do all this cognitive load, not have to do all this work, frankly. And then let's just do the tech things, make it simple for the users, remove the friction, make it fun for them, make it as seamless as 1, 2, 3. So folks like Built and other folks who are adopting Knot and similar technologies that make it easy for users are winning, and folks who continue to have friction are just going to end up lagging behind, kind of like Ross said. You can't stay complacent in this industry.
Yeah, absolutely. I mean, it feels like, as you say, for every fintech that I sign up to, that's just more. There's more user things that I need to sign into, more money flows, more complexity. And I think what you're saying, there is a lot of the research that we've done recently, doesn't it, Ross, on the mental and cognitive load of dealing with your money. And I think we're seeing more and more fintechs think about automation in a very meaningful way over something like very complicated user experiences.
It's such an important point. And I think this is, we're talking about technology solving for real user problems, real user pain points, and doing that in a way that is fundamentally new. And I think we've seen a huge amount of improvement in how financial services get delivered to customers, but there is still fundamentally a gap in terms of how customers think about their finances and how customers think about managing their finances, and those sorts of tools and services that they have available through their financial providers. And yes, absolutely, as Rory said, across a very, very fragmented picture. And that can be as simple as, we do a lot of research at 11FS. We talk to a lot of customers. we've got open banking now, and that's great. And people will integrate all of their accounts. And so they can get that holistic view across the top of all of their accounts. Typically, though, what they don't have is that view of, say, all right, well, how am I doing against last month? Or how am I managing that glide path once all of my bills have been paid? Do I have enough money to get through to the end of the month and sort of live comfortably, right? And so we see an awful lot of manual hacks that people put in place to sort of address this. It might be the little black book where they're writing down all of their transactions and doing, addition and subtraction to see where they're at and where you're dividing that across the rest of the month. I mean, we've seen all sorts. We've seen people with like born identity style cork boards with red twine and trying to track everything. And I think it's fundamentally it's that. It's like, where is the intelligence that we can give to customers that sits on top of the sort of the products that we've always had in banking for hundreds of years that makes their life easier? And DBG, to your point about managing money, I suppose that strays into the realm around like financial literacy and sort of confidence. And I think an awful lot of people don't feel like they necessarily know what they're doing. They don't feel like they really understand how to manage their finances. And none of us like doing the stuff that we're bad at, right? That's the stuff we always procrastinate on. It's the bit that we sort of like, we kick that can down the road and we're like, oh, maybe I'll get there.
Yeah, it's interesting what you're saying, because that mirrors a lot of the growth of technology over the last, say, 3 or 4 decades into this massive multi-trillion-dollar industry. And yet productivity is roughly, in fact, in some places it's going down, not up. So, it's a big economic story that we just haven't seen the productivity gains from technology that perhaps we should have done. And, to your point, where is the automation? That's maybe where the expectation is in the future. We might be seeing some of that. I think we also see that mirrored quite a lot in the commercial banking industry. In fact, we did a report on commercial banking a couple of months back, and that whole sector is really pivoting now to really solving some of these middle office and back office operational issues, where you do have businesses that have like, crazy corkboards or, manual ledgers. In technology, you talk about this thing called the swivel chair approach, where you've got one person, entering data from one system, swiveling the chair and just manually entering it into another system. And you do still see this happening more and more. And so it's just been fascinating to see commercial banking really step in and try to start to solve some of these problems.
I actually think that's a really important call out, because and this applies from like that sort of like those smaller businesses through to the mid level into the maybe corporates slightly less so, although they would love to reduce that administrative burden. Of course they would. But I think when you look at some of those others, those smaller businesses in the sort of SME space, all they want to do is run their businesses. But yet they are burdened with all of this admin that they'd rather not be dealing with. That's the bit that takes away from running their business. It's like the tweet about AI. It's like, I want AI to help me do like the more artistic pursuits, not like, spend more time like washing the dishes or whatever it is. And I think that's such an important point.
Yeah. And Rory, not the way Knot talks about the kind of stuff that you do is building buttons into the tech stack of an app. And kind of love that as an analogy. I mean, I'd love to hear from you how you think about where you sit within the stack. Are you a new type of business in some ways?
David, first of all, I love the way you say my name. I mean, that is like music to my ears with the accent and everything. Rory, I mean, it's great.
Rory.
Rory. Boom. There we go. Jumping into the question, I think we have to build easy buttons for the user. I mean, even just listening to Ross and you speak about the hardships of the user experience, why would we do anything else? We don't want to be just another friction point where you have to download an app to do something and you have to sign up and you have to go through all these 1, 2, 3 steps. We just want to be a little SDK that's already on your native experience. You don't have to context switch. You're already in the flow. In fact, we're removing the friction from you having to go put down your phone and do other activities. So we just want to be the easy button. And historically, there have just been not APIs for doing these type of activities like adding your card or grabbing your digital invoices or canceling subscriptions. So we're just building out all of those easy buttons for the activities that you typically do on a merchant platform.
It sounds like a no-brainer to me listening to you talk. And is one of the kind of questions that comes to mind is, why hasn't this been done before?
Yeah, that's a great question. I think it's just hard. It's very hard to build. There's millions and millions of merchants. And where do you start? And who's your first customer going to be? And what's the first pain point going to be? Imagine where we started. We started with updating your debit or credit card for banks. It's like such a sliver of an industry, seemingly. And the only reason why we were able to understand that industry is because we made our own debit card. And we understood what a huge pain point it was to update your card at these places. In fact, we would call up our customers and say, hey, why didn't you update your card here? And they would tell us about the friction and the pain point and having to do all this different activities. And we begged the networks to build it. And they said, hey, we're not going to build it. That's not our business. And we said, okay, we're going to do it ourselves. So I think the reason why folks haven't done it is it's non-obvious, when you're thinking about it from first principles. And then it's just difficult to do. You have to build hundreds of these merchant integrations, and you really have to go for it.
I also love that as a pivot, by the way, as a startup.
Thank you.
Seeing a problem, with a potential customer and saying, I'm just going to go ahead and solve that problem and, park some of the other things I'm doing.
Yeah. I mean, I think you really hit the nail on the head. So many great companies that have pivoted before, whether it's Slack, whether it's Instagram from Bourbon. For us, we showed our investors what we were making when we were Millions, the debit card company. And we said, we think this is pretty cool. You could update your card. Maybe this would help Millions. Maybe this would help someone else. And some of our investors were card owners themselves. They're running their own card business. And they said, I want that. Can I buy that from you? And we said, no, this is our thing. We built it for us. We're very early stages. It's not ready to sell to anyone, just internal use. And they said, wow, I would really pay a lot of money for that. My whole business is getting the card on file. And that was like a little light bulb moment. Your whole business is getting the card on file. That sounds important. That sounds like we could provide real value to you.
That's amazing. Just to double click a little bit more on Knots, it'd be good to talk about a case study or an illustration of what it actually is. And I've got a line here that sounds interesting. So let's take this as a scenario. You've been asked to get a bunch of supplies for a corporate event or a Christmas party, let's say, but you don't have access to a company card. With the right interconnectedness between a card provider, bank, and merchant, the company could set up a one-time use card with the exact right money to pay for the items needed. And that's kind of amazing, right?
Oh, yeah.
And is that how the technology works? You basically spin up a one-time use card.
Yeah, it's pretty much exactly something we enable. So we wouldn't spin up the card ourselves, but the end user, like the card issuer, could spin up the virtual card if they were savvy enough, if they were building the easy buttons for themselves. And right now, pretty much any B2B card issuer, like a Relay, like a Ramp, like a Mercury, they could spin up virtual cards just like that. So they can absolutely spin up virtual cards for a very specific use case, and then they can kill it. And then if they want to update the card in the future, they could use Knot to do that. And we maintain a connection in the merchant. And if it's lost, stolen, reissue, they can update it again. So there's so much different functionality. And imagine you were just signing up for a bank for the first time and you've never even used their service. How do you even get their card provisioned in the first place? You just log into the merchant and via API, we add your card as the preferred default card. So there are all of these easy buttons, kind of like you're describing, that we're implementing for Knot.
It sounds like virtual cards is one of those core new capabilities that is just enabling so much change in the market. I mean, recently I was reading about how, single-use virtual cards reduce fraud in like Deliveroo riders. So in the UK, we have Deliveroo. You order via the rider shows up at the grocery store. As soon as the rider is ready at the checkout, a virtual card is issued for the exact amount of the order within a very, very small window of time to minimize fraud. I mean, it's just incredible how that system actually works and makes that happen. Yeah. And I think that's a lot about what we're talking about today. Yeah.
There's two other big innovations with the virtual card too. And this one's obvious, but it costs money to print the plastic for a physical card, $2 to $3 for an average bank. And that's annoying. And then the second is obviously it takes time for the physical card to get to you. Maybe a week. If you're in maybe a geosparse location, maybe 2 weeks, which is, again, annoying for the end user. When a user signs up for a bank, their intent is so high. But as time drops, their intent goes back down. I think that the banking product is the only product in the whole world that you cannot rip and replace. When I get a new phone, I instantly port everything to my new phone. I take a photo, I say, look how great this camera quality is. When I get a new shirt, I put it on. You get the picture. When I get a new bank, I already have my old details stored online because I came from a different bank. Why would I rip and replace it? Why would I invest that energy? It's like I'm already building a negative habit with my old bank. Why would I take the time to do it? So just building the easy buttons is important for us to stop that method of thinking and make it simple to switch. The same way when you get a new mobile device, just switch right away.
Yeah. And Ross, you mentioned earlier identity. I guess we have exactly the same issues with your virtual identity across any kind of service that you take. The portability isn't really there. Okay, sure, it's there with things like, your Google identity or your Apple ID. And there's been some really interesting innovations there, but more complex, personally identifiable information like healthcare data, financial data, it just still isn't portable. Open data, open banking, that was supposed to be the answer, right? And it just doesn't seem to really have materialized yet.
It was. And look, I mean, I suppose an important context point here, because obviously we're talking about where could this go in the future? We need to remember that financial services is a tightly regulated industry, and it's regulated for a reason, right? And I think we are the Facebook generation. We've all kind of learned that if it's free, you're the product. And I think we're increasingly understanding the value of our personal data. And so, look, there is a perfectly valid argument for putting frictions in place to make sure that data isn't shared too easily. But equally, look, it's like everything, it has to be balanced. And there is a right way to do all of these things in a way that A, is like compliant from a regulatory perspective, B, is a much better experience for users. And I think we just need to make sure that we're approaching that in the right way, right?
Yeah, absolutely. And on that note, we're going to take a quick pause here for a break before we dig into what this technology means for the future of fintech. It's all coming up after the super quick break, so don't go anywhere.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
How long have these meal kits been in my fridge? 1 week? 2? How much am I spending on these? Hey, Erica, did my subscription go up?
When your questions about life turn into questions about money, there's Erica, the virtual financial assistant to help you spend, save, and plan smarter. Only from Bank of America. What would you like the power to do? Erica is only available in the English language. You must download the latest version of the mobile banking app, only available on select mobile devices. Your chat may be recorded and monitored for quality assurance. Message and data rates and additional terms may apply. Bank of America N.A., member FDIC.
Welcome back to Fintech Insider Insights, where this week we're taking a look at the next generation of fintech services and how fintech can be made to feel invisible. Before the break, we looked at the capabilities that a truly embedded and interconnected set of digital finance experiences could power. We spent a lot of time talking specifically about virtual cards and payments and how important that is and fundamental that is to pretty much everything we do in our financial lives. Now we'll be looking at what these capabilities mean for the future of fintech and the sector more broadly. So let's start, Rory, with what does this mean for incumbent business models? And you could probably include fintech in that, right? If you're a Monzo, in some ways you're looking like an incumbent business model in the sense that you're a bank. You operate a lot more efficiently and you're more digital, but you're still trying to capture customers for yourself, right?
Yeah, great question, David. My thought is that if you're a business where friction is your moat, you're just not going to survive anymore. You can't imprison your customers and expect them to stay in their jail cell and not escape because they don't have the key. Because companies like Knot and others are building easy buttons to do what you want to do, the real winners will be consumers and the best platforms, because you'll be able to choose the platform of your choice, choose the businesses you want to work with, and be able to port over your information, your cards, your identity, and really break out of that prison that you may be in. So if friction is your moat, it's time to really change the name of the game.
I love that. I love that analogy so much. And actually, we were talking about open banking a little bit earlier, Ross. Open banking is supposed to be one of the things that breaks that moat, right? And it particularly breaks the moat of the incumbent payment networks.
I think so. And we are, look, there's different things that we can point to, like pay by bank and variable recurring payments and all of that sort of stuff, where maybe we haven't yet seen that absolutely peak. And it feels like there's still a huge amount of opportunity there for someone to really nail that. And it feels like that is going to have an enormous effect on what we would think of as the sort of established payment provider landscape. And obviously, so that's on a payment side of things. I think when we think about the account aggregation side of things, I think it's been successful insofar as it has given people a better sort of, I suppose, a better visibility or a better understanding of their finances. But what we've seen in countless pieces of research that we've run is people love that. And once they actually get that enhanced visibility, that enhanced understanding, their appetite for more sort of grows exponentially. So, right, okay, now I can see my financial position across all of my accounts. Well, how do I make my money work harder for me? What are the things that I can do to actually start to improve my financial position? And I think, again, maybe it's that next level of like sophistication and intelligence where I think the industry is still just falling short. And I think, again, with that little bit of headway in terms of opportunity, if we can really nail that, I think that can have a pretty seismic effect.
Yeah, absolutely agree.
I think you're hitting something very deep there, Ross. I'm thinking back to when I was young and I had no internet and I had limited resources for knowledge besides an encyclopedia. And even then, I was thirsty for some knowledge, and I'm assuming you guys were too. But now we have the internet and everything at our disposal. And that thirst for knowledge just doesn't end once you learn the tallest mountain because you read it in an encyclopedia. Now you want to know how long it takes to trek the mountain. How much would it cost? Do you need a Sherpa? And you just keep going deeper and deeper and deeper. If we think back to 2008 and we bring it back to the fintech analogy, when the mints of the world were popping up, at its core, it only told us some very simple things about our finances. Did I spend at the grocery store? Did I spend at the gas station? Did I spend online? And yet people, including myself, were enthralled with that data. I said, oh my God, my grocery spend is $150 and last week it was $175. And they don't know your digital receipts. They don't know if you bought a banana or oranges or so on and so forth. But as companies bring this data to the forefront and they give you more granular specifics and deeper, I think our thirst for knowledge and understanding ourselves and improving ourselves and kind of digging as low as the well can go will only continue to improve. The same way that now that the internet's out there, we still just seek more information than anyone could imagine.
Yeah, it's so interesting, and that's when you talk, what I think in my mind is almost like a pyramid of data that tells me more and more and more about, you can make parallels with health, for example, and health wearables. And actually what we've seen in some of the research that we've done is that the more data you give to people, the more action they want taken on behalf of that data that's given to them. So what they don't want is to be presented with optionality. What they want is you to do the thing. They want you to do the thing. If you found out that I am unhealthy, if you found out that there is a way, for example, for me to be saving more money, I want you to sweep that money into a pot at a higher interest rate. That's what I want you to do. I don't tell me, by all means, but please take the action. And there's some also very interesting parallels in AI, for example. Like if you just look at all of the kind of doom scrolling on generative AI, kicking everybody out of their jobs, for example, actually the reality of that is more about productivity increases. Well, if I no longer need to do manual reconciliation and it's done for me, for example, I can do other things. It's not about firing people. It's about making everybody a little bit more productive. So it's just a much better way of looking at where the future of fintech actually is.
And it's an important point, right? Because I think, look, we had a public service announcement at the start of this that said, look, this could get techie in places. And, predominantly, look, we're talking about, APIs and core capabilities and all of that sort of stuff. But I think what we're hitting on here, and I think it's quite an important point, is that sort of uplift in the tech side of things and transformation, all of that stuff that's coming to the fore feels like it's meeting consumer appetite. And I think that's going to be absolutely key to how successful this is. I think we've had 10 years of probably the most rapid and the most volume of disruption we've seen in financial services in a couple of 100 years to prime consumers for this, right? So consumers are like, I kind of get it. And I'm looking at, the services that the experience that I'm getting from services like, Amazon or Uber or whatever that is. And they're kind of going that, actually now I understand that there's no reason that I shouldn't expect that from my bank or my insurer or whatever that is. And so that just is a sort of like that technological uplift hitting that consumer appetite is potentially really, really interesting.
Absolutely. And the Amazon example is so relevant for our conversation because, a lot of the attraction to that is it's the one button, right? And it's the dependable delivery, very, very quick. It's the restful, invisible service that just works for you. Totally in the background. Rory, I want to also pick on a little bit what you said about the moats and those moats being fragile. I think the other thing that's causing that fragility is regulation. Some of the things that we're seeing are regulators all over the world, but particularly in the EU. I mean, we could just dwell on Apple Wallet, for example, having to be opened up in the EU. Now, that is probably the canonical example of a moat, right? That a regulator has ripped to shreds. It's taken years to get through, but it's finally happened. And now pretty much any payment provider can use that NFC chip to make payments through the wallet. So, where does that leave their business model? And Apple Wallet is an example of a new business model. We're not even talking about a legacy incumbent bank that's built up a moat, right? So does it feel in some ways that the entire idea almost of holding on to a customer, in fact, is going to be increasingly not viable as a way of making money? I don't know.
That's a great question. I'm kind of torn about the Apple news a little bit. As a techie, I love it, right? Like new capabilities, new functionalities. As a business owner, I don't like being told what to do, in general.
Yes.
But what I do like about the movements in the EU and in parts in the US is that consumers ultimately are winning. In every example, almost every example, consumers at the end of the day are hopefully being put forth first. Whether it's open banking, allowing consumers to port their banking data, whether it's the Apple stuff where folks will build other products that hopefully compete with Apple, either make Apple better or introduce new products that help consumers. Ultimately, at the end of the day, I think increased competition, increased consumer choice is great for humanity in general. So I like that. And I think as long as we continue to think about the consumer and less around politicking and looking out just for our own businesses, that the folks who put the consumer first will continue to win. And historically, Apple's always been very consumer first, I think. So I think they'll probably have a deep, deep, deep wedge in, and probably they'll be boxing out some folks as well. But I wouldn't be surprised if a Square 2.0 pops up that is interesting and new and novel. I wouldn't be surprised if some super geniuses drop out of school and use this new capability to build some awesome stuff. I mean, it's only been, I think, maybe 12 years or so, maybe less, since you were able to build keyboard shortcuts like on Apple, and obviously it's been maybe less than 20 years certainly before you're able to build apps. So just the more capabilities where you can build things and use platforms to build awesome stuff, I think just helps consumers.
Well, I think there's some interesting points in what we're saying here. I know I said this earlier, like financial services, highly regulated for a reason. And what that means is that regulators are going to have a key role in sort of shaping where ultimately all of this goes, right? And I see that sort of on two fronts. I see it on the regulator front, which is what's driving how they think and what's driving the regulatory standards and all of that sort of stuff that they put out there. Are they thinking almost solely about just managing risk within the financial system? And if that's the case, then really they're probably just thinking about innovation and disruption as a risk and trying to manage it or essentially shut it down. Or are they sort of, we talk about sort of 10 years ago, the FCA really being the gold standard in terms of how they engaged with those sort of very early fintechs and help them on the journey, help them get to market. We've seen in lots of other markets like HKMA and globally, sort of people follow that model. So that feels pretty okay. And then on the financial services provider front, are they going to think in terms of, we are just going to take a very risk-averse approach and we are just going to comply with the very letter of the regulation that's being put out there and the standards? Or, to Rory's point, are we going to take a much more customer-focused view? How do we operate within the spirit of that regulation, but equally, make big steps to solve for material customer problems? And I think that's going to be an interesting one in terms of how that plays out.
Yeah, I agree, because actually a lot of the upcoming regulation, I think it was in our commercial banking report, where we found that the burden of regulation is increasing like almost exponentially. And part of the reason behind that is systemic risk. There's just so much risk being brought into the system through data sharing, through generative AI, et cetera, that you could make the argument that is absolutely constraining innovation as opposed to enhancing it and boosting it, and that makes people way more risk averse, particularly on the incumbent banking side, which sort of leads quite nicely into how do you think, Rory, about risk and fraud, right? Because you could make the argument that being an intermediator between data flowing from banks to merchants, that there is definitely risk in business models like that. How do you think about that?
Yeah, absolutely. That's a great question. I think that risk and even more so security is probably the number one thing that we think about at Knot. We're dealing with your most secure details, your card number, your expiration, your CVV, your login details, etc. One of our first hires was our fractional chief information security officer, who was the CISO at Yodlee for a decade. So just kind of going by our hiring history, it's something that is incredibly important. Imagine if we were to ever have a security vulnerability. Obviously, that would be detrimental to the business. So it's something that we invest very heavily in. We're also lucky, though, there have been some pretty innovative companies that are PCI level 2 DSS vendors. These are folks who just process the secure PII on their end, and it's their whole business to do it securely. Mm-hmm. Whether it's VGS, whether it's Basis Theory, whether it's EverVault, we're lucky to work with all three, actually. To kind of have a nuanced approach to security where we can do the things that we're really good at, building the APIs to provision data, building those easy buttons, and they could do the things that they're very good at, keeping information secure, making sure that it happens in a black box environment so we can't get the data, so that way we're not liable, and they can't even get the data in many instances. So I think that it's important to recognize security and fraud is number one for our business. It's not getting the card top of the wallet. It's making sure that we can do it 100% of the time, 100% secure. And then number two, working with our partners in the ecosystem that have their incentives fully aligned with us, that they're focusing day in, day night on these initiatives as well.
So, wonderful thing about fintech, right, is you sit within an ecosystem and you use point solution providers that can cater for these things. And a lot of these providers just didn't exist 5-10 years ago. So the more businesses are able to double down on solving very specific problems, the more businesses can assemble those building blocks into entirely new customer experiences for the future, which sort of leads me in maybe to a final question, Rory. For you at Knot, you pivoted into this, wonderful new space of connecting banks and merchants together. What next for Knot?
Great question. So I'll give you a little precursor. I won't say the name yet because I'm not sure when this podcast will go out there, but we've got a very, very large banking customer going live next week, probably our largest one yet. So next year, you will see 6 out of the top 10 banks go live with Knot for Card Switcher. You will likely see most of the top challenger banks go live with Card Switcher. We're in process with many of them. And then you'll see new easy buttons we don't just have to add your card details. We could read the card details and see what card is there. We could monitor if the card is still there. And then, frankly, anything that you can do at a merchant, whether it's canceling a subscription, which we've built out, we just haven't released it yet, or whether it's reading other things that you're doing at the merchant, I'll keep it vague, you'll see that released with Knot. So just easy buttons for merchant connectivity. We're like Plaid for merchants. Log into the merchant, we're going to read and write data on your behalf.
It's so fascinating. The amount of stuff that you could do by intermediating that relationship is just extraordinary. I mean, Ross, maybe to you for a final word, it's, do you think fintechs could become, in some senses, invisible, just dissolving into these buttons?
Yeah, I think it's gonna play out in one of two ways, and I suppose a lot of the factors around how that gets shaped is we've sort of already touched on. I think, look, I don't think we're going to see the end of like banking apps and people going to the app to do what it is that they need to do, and whether that's transactional in the app or whether we start to get in some more detailed, in-depth insights around, helping you manage your finances and all of that sort of stuff you would naturally manage in a desktop, whatever that looks like. But can I see those embedded journeys, those financial services embedded within those wider journeys to deliver like better customer experiences, better customer propositions, a more straight through and sort of seamless experience? Absolutely. I think that is definitely the way that we're going. And I think, if you were to, I suppose, take one thing away from this podcast in terms of like a pithy sort of sum it up for your friends, I think Rory's point about friction and moats, I think is a really, really good one, because there's a clear trend there, right? And I think the only other thing that sort of a little light bulb went off for me when Rory was talking about the importance that they put on protecting customer information and fraud and all of that sort of stuff. If I go back to the analogy that we said about that sort of like the tech capabilities now and what that can enable in that meeting customer appetite, the other side of that that's equally important is maintaining customer trust. And I think we should sort of underscore that a little bit, because it only takes, one sort of event or incident and it probably sets us all back quite a way. So, I just think that's also a really important call out.
Absolutely. At what point do we not want to automate things, and do we actually want high touch visibility, and where does that sit? Now, fascinating conversation, the both of you. Thank you so much. And that wraps up today's discussion. Where can people find out more about you all? Ross?
You can find me on LinkedIn, Ross Gallagher. And if you want to find out more about 11FS, then it's 11fs.com.
And Rory?
I'm Rory O'Reilly on LinkedIn and Twitter. And if you want to chat about Knot, we're KnotAPI.com.
Awesome. And you can find me on LinkedIn at David BG. Thanks everyone for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others to find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts at 11fs.com. Thanks very much and goodbye.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.